I made a huge mistake with my family's healthcare insurance, and it cost us thousands of dollars. If you're thinking about using Cobra insurance, I'm going to show you guys what I wish I would have known before getting into Cobra, and why I wish I never would have went on to a Cobra program to begin with. And at the end of this video, I'm going to tell you another mistake that I made involving health insurance that threw me off at tax time and ended up costing thousands of dollars at the end there too. So back in 2018, when I was leaving AXA Advisors, ready to start Scenic Financial, because I was on the insurance plan and my kids were on it, and I left, obviously I lost coverage. So I had to go and find other healthcare. Now, being overwhelmed and trying to figure out what I'm going to do with this 300 something clients, during this transition, we just bought another home at the time. Health insurance was like the last thing I wanted to really go around and shop for. I never knew much about it, never took time of day to look into it. I always heard Cobra is what you're supposed to do, so I blindly went with Cobra right off the bat. So me and my twins were on this Cobra insurance account. Now, before leaving, my healthcare bill premium was maybe a couple $100 a month, $200-$300 at the most for family coverage. On Cobra, the rate jumped to about $687 per month. And when you're leaving a job, especially one like mine where there is no set salary, and you're going from making a couple $1,000s a month to nothing, and you don't know how long it's going to take to get back to where you were because you're essentially starting over again. And to have your healthcare triple is kind of a scary idea, but I knew this is the dream I had. I was going to pursue it no matter what. So I just went with Cobra for months on end. And I was paying this huge bill every single month, racking up credit card debt because I didn't have enough money to pay my other bills, pay the startup cost of the business, took a loan on the 401k account to help cover things, even took one small early distribution penalty and paid 10% tax on it because we were so destitute at that time. And part of it was because this huge healthcare bill that I wish I never took out. Now, at the time, I thought that's really my only option I had. I never really looked into the Washington HealthPlanFinder. I always thought Apple Health was for low-income families, that I made too much to qualify, so I never bothered with it. It wasn't until my friend, who also left AXA at the same time, he also had young kids on his insurance like me, told me that I should look into Apple Health. He said the income limits were a lot higher than you think, and go to find out he was absolutely correct. The income limits to get a kid onto any type of Apple Healthcare at the time, I don't know what it is now, but it was about $80,000 or so is your taxable income. So as long as you made less than that, the kids can get it on it. And from starting a new job and not making anything, we easily qualified. So they were able to get onto Washington Apple Healthcare. That took them off and relieved a lot of the pressure. I then went onto Washington HealthPlanFinder, and with what our tax credits were on at the time, I was able to get health insurance for just myself for less than $3 per month. So I basically saved $4 per month just from taking the time to do my research and find the right avenues for healthcare. And I didn't find this out until I was probably 8 months into it. So, $400 for 8 months, a couple $1,000s that I ended up losing just because I didn't know better or do the research. So if you're thinking about going to Cobra, do your research, especially if you're closer to retirement, you're leaving coverage. You need to look into the PEBB healthcare system. PEBB has rates for retirees, so you don't have to even be collecting your pension anymore. You'd be entitled to PEBB benefits. And PEBB is just healthcare insurance, very similar to the SEB program if you're a school district employee, and it has rates for you before you turn 65. Now, of course, you can compare that with Washington HealthPlanFinder to find the best rates for you, but a lot of my clients retire early. Typically, they're using the PEBB insurance, and if not, they're at least deferring coverage until post 65, where they can get on and use PEBB as a second pay option to Medicare. Now, the one other mistake that I've made, and it took me a few years to figure this out all the way, was when you go to Washington HealthPlanFinder, a lot of times when they're giving those quotes, they're guessing what your income is for the year, and they're applying tax credits automatically. And if you end up making too much money, the tax credits they applied to your premium bill, you end up owing that at the end. So for example, a couple years ago, I was paying about $350 a month, whatever it was for the insurance. They were giving me like $50 a month or $100 off of what the actual premium was. I made too much money. I didn't qualify for any of that. So when it come time for tax filing, they hit me with basically a $2,000 underpayment bill. They just basically took it off of the taxes. I still got money back, but it took a big chunk of what I thought was getting back away from me. Now, if I didn't have any money going back, that would be money that I owed. I saw a couple recently make the same mistake where they're so hesitant when working with me to do Roth conversions because they didn't want to trigger the credit leaving and having to pay more money. But when it came time to renovate their kitchen, they didn't hesitate or think about it at all. They took money out of their retirement accounts, renovated their kitchen, and then they got slapped with a $4,500 bill come tax time, because they didn't qualify for the tax credits, and they made a lot more money than Washington Health originally thought. They basically received too much credits over the year that they paid all back at once. Nothing is worse than getting slapped with an unexpected tax bill from the IRS. Well, if you're going to go on the Washington Plan Finder, make sure you look at what income they're estimating, do your due diligence on if you're going to make more of that. Safest bet is just to assume no credits, pay the full amount, and then at the end, if you end up paying too much, they refund you back come tax time. So if I could go back in time, that's something I definitely would have done. I would not have taken the offer they made me, even though it seemed like a really good deal at the time, because I didn't want to get hit with that surprise bill at the end. Hope this video brought some insight to you guys when you're exploring your healthcare options. If you have a similar story about Cobra or anything health related, feel free to leave me a comment below. I'll catch you guys next time. Remember that your future depends on what you do today.